If
let's
this
just
is the
say,
reason that they come in with -1 EPS in Q4, I'm gonna be super fucking mad.
okay, so that's I guess what I'm trying to get to is like either they're like, hey, we got it in the bag, don't worry, trust us, but they can't really like forecast to that certain degree for another quarter, especially in this like macro environment. We could get another hike, we could get so many things could happen that could affect their forecast.
Unless they come out on this earnings call and says, "We are making this strategic investment," which could impact profitability in Q4, but if we don't hit profitability in Q4, we're gonna come in at -1, and then we're gonna be GAAP profitable going forward every quarter, I'll accept that answer. But if they don't say anything, and then they miss in Q4, I'm gonna be really fucking pissed off because of how much Noto has said that they're gonna be profitable.
SoFi Center is very big news, in my opinion, whether it's good or bad. It's by far maybe the biggest news that SoFi has done in quite a while. And I'm interested in everyone's take. So,
To give you some background, and give everybody on the channel in the comments some background, I grew up in the golf industry. In addition to my other degrees, I actually have a degree in golf facility management and ran outdoor ops at a country club, taught, et cetera, et cetera. So this is extremely big news if things go the right way. So the big problem with golf, barriers of entry is extremely expensive, but it's very time consuming. Getting the younger generation involved with how tech immersed everything is. And look, when you get older, 4.5 hours is a lot of time. What they built is a tech infused new version of golf where it's kind of half and half. They're building an indoor facility for short game with 4 or 5 sand traps, huge putting green, and an area for chip shots. And then you have a very high tech simulator that they're hitting into. Simulators are nothing new. This one's a monster. They're going to be mic'd up, and it could actually be a better television experience. And I promise you, it's going to be a better in person experience. Golf events are a lot of fun. But if you're actually trying to go there to view the stuff, you're better off staying home because you actually have to walk the whole course if you want to file Tiger or Rory
right,
or someone.
right.
This is going to be a much more intuitive space and it's going to be so much quicker. A round is going to take like 2 hours in this facility. These guys, when they tee off, they're hitting the ball. I think the average on the tour is around 292 or something like that off the tee. You're walking to your ball, you're waiting to find your ball, you're waiting for the next person to go. There's none of that anymore. It's action, action, action. They're going to be mic'd up. There could be a gambling aspect. This is going to have viral clips of them talking trash. It's going to be
Yeah.
like the Tiger Phil event that they had on pay-per-view to the next level, I believe. Anybody who follows golf is going to love this, especially with how tech immersed on Instagram and YouTube that golf has become. What they are building now could be a model that could be replicated throughout the country. The worst part is in the Northeast, anywhere that has a real winter, Canada, you're not playing golf outside in the winter. You have 6 to 8 months to play golf. This makes golf year round. Could transcend the game and make the barriers of entry less from a time aspect, from a cost aspect. The National Golf Foundation said that 41.1 million Americans played golf both on and off the course in 2022. The category of young adults is the sport's biggest customer age segment from 18 to 34 with 12.2 million people. Juniors is 3.4 million juniors, which has grown by 36% or 900,000 by 2000 from 2006 through 2022. This is the target audience that SoFi's been going after. Tiger, Rory, Adam Scott, Ricky Fowler, they're all signed on for this. It's the who's who. You have the guy with the Boston Red Sox involved. I mean, there is a lot of money going into this. There's going to be a lot of publicity around it. And this could be a really fun thing to watch on TV or on the tech platforms. And this could be freaking huge for golf. Could be really good for SoFi.
I'm really excited, and I think it like you said, it's going to really help it turn into more of a spectator sport, like because they're all mic'd up and everything. I kept comparing it to F1 because it is going to hopefully bring on a ton of viewers, and that's essentially what TGL wants and what SoFi wants. What do you think is SoFi's role in this, and do you think that that is the best target demographic to go after? Is this sort of more affluent, more expensive style sport that is growing very fast in America?
Golf is very expensive. Think of it as when you see the people that credit score worthy SoFi goes after, look at it in that aspect of what they're going after.
So essentially, SoFi is sponsoring this entire sport. So TGL is this new sports league started by Tiger Woods and Rory McIlroy, and they are sponsoring the entire show. Even embedded in the logo is SoFi. So it's TGL by SoFi. Whenever you look at all the new players that they're bringing on and everything,
Yeah, stay on that
in the
picture.
arena, essentially the players are playing from here. They're shooting it into this simulated screen that's like 20 times larger than a normal simulation screen. So they hit the ball in the white, and then the simulator will take it from there and generate what it thinks where the ball should have went. Supposedly it's extremely accurate. SoFi's name will be plastered all on the inside and outside of the arena, but we're going to pay for those naming rights.
I think the best way to look at this is, instead of dumping advertising dollars into campaigns that don't necessarily hit the target demographic, they're allocating part of their advertising spend on an annual basis toward this, in addition to SoFi Stadium,
Right.
because the logo is going to be plastered all over the place. And it's just going to be on repeat in viral clips, instead of just paying for ad space for a 30-second ad that runs once.
Some people are making the connection that this might be like some of the other sports spin-offs that celebrities have tried to do, like Big Three for basketball, where it's more of a 3-on-3 exhibition that kind of went nowhere.
The difference is this could become a huge business outside of the SoFi partnership for TGL. Think of like a McDonald's franchise. You don't have to replicate this with the sheer size, but you can make satellite and actually create an indoor league for regular people. I mean, the round is half the speed. You can do multiple simulators. It doesn't have to be that big. Be a normal size simulator, like when you go into a PGA Superstore. Build it out. You can make indoor league memberships. I mean, there are indoor league country clubs in New York City that I've been to pre-COVID. But I do think that this league is going to transcend a lot of things with golf. I think it's going to be huge.
And for all the comments asking, it will be on ESPN. Starting January 2024, they've already broken ground on this.
I mean, obviously we don't know how much, but what do you estimate this is going to cost us in marketing?
I have no idea, and I don't even want to throw out a number.
How many years is this for again? Or is this just 2024?
They said multi-year partnership. Honestly, we'll learn more about on Q3's earnings call, I'm sure. The way I looked at it is we pay $30 million for SoFi Stadium. It's a much, much bigger arena. Yeah, 2,000 people versus 80,000. I also do think that it comes with a massive premium just because of all the names that are on it. If I were to guess, and this is a pure guess, they were paying $20 million a year because the naming rights for SoFi Stadium was $30 million. So
10 to 20 is probably a good guesstimate until we get more information on it.
Yeah, it's not going to be like $100 million. I don't think it'll be so far off the ballpark of where our last naming rights deal was at.
I think the year-round thing is really big. The celebrity endorsements is huge, and just all the content that will be created out of this. I remember when Steph Curry hit this hole-in-one, and this video just went viral. Like, I can imagine stuff like that around.
Go a step further. This doesn't just have to be this golf league. This stadium's not going to run idle. When the NBA is in the off season, when football's in the off season, I would be willing to bet that they are going to do sports league competitions. They're going to do a lot of stuff with this.
So that's obviously another positive, and just the amount of celebrity endorsements. Like, obviously SoFi has a tried and true PR and marketing strategy around increasing the unaided brand awareness through sports. I think the next sport that they break into is tennis.
Tiger Woods' PGA Tour video game is absolutely huge. What if this becomes a venue inside his game also? Like, instead of playing on one of the courses like Pebble Beach or Bethpage Black or Erin Hills or somewhere, you actually play through the simulator on the game as one of the challenges or one of the events. I mean, if this ends up in Tiger Woods golf, that's going to be so big.
But yeah, I think it is a good bet. Anthony Noto likes to make these sizable bets. And one thing that I keep harping on that I'm not hearing enough about is I find that this is really proving that the SoFi Stadium deal was absolutely a smashing success, and that the people who doubted it before, I think going after a second deal really proves that we brought down our customer acquisition costs. We had high retention with the people that we actually got from SoFi Stadium is actually working, and we're willing to replicate that system.
Yeah, and
Yeah.
look, SoFi Stadium is something that, I think Wells Fargo has their name on an arena. A couple of other players, I think Citi has their name on an arena. It's just one of those things where if you just look at from 2018 to 2023, that 5-year span, they went from 3% brand awareness to 8% or 9%, tripling essentially their brand awareness. In the next 5 years, through expanding into other sports, they could really become a household name. If that triples again, then they're right on the heels of the largest banks in America, which hover around 20 to 30% brand awareness. So, another tripling and they're right there.
Yeah, this is all about throwing SoFi's name in everybody's face as much as possible to get to their end goal.
There was a couple comments that really stuck out. So one is Doug's comment saying that Noto did actually just recently talk about this. He was on an interview talking about this, and then he explained that because of the Monday night football games or whatever, that it is seasonal, and so this will close that gap, which is quite exciting. So sports sponsorships. I can't say that all year round. Jeez. Harry Garcia is saying, I'm skeptical, especially that professionals playing a computer game where they could be beat by an amateur, no weather or other natural obstacles.
The simulator can simulate different environments. I think that's a technical problem that is fairly easy to resolve. Those professional athletes, Tiger Woods and the like, they are elite players that actually compete in the sport, even though it is a seasonal sport. They don't just practice whenever it's, sunny outside or it's summer. Like, they use simulators regularly to practice and perfect their game.
Tiger Woods' backyard or Rory's backyard. Their
Right.
backyards have a par 3 course in it, and they live in Florida. This is not two people getting a controller and playing Tiger Woods golf. This is real skill. You still have to have the same force in your golf swing to project the ball over 300 yards. You still have to have the accuracy in the chipping area that they are building with the short game area. You still have to be able to hit the sand shots. Everything.
The simulator knows where you shot from. So it can tell the angle of the shot. It can tell the force of the shot. And then it's just projecting out where that would land. And supposedly from what I'm reading, like, they're pretty dang accurate. This is not new technology.
I'm not that excited about this because I really don't care about golf, but I understand that's my own bias. I know there's obviously a huge population for it. If we paid, let's say 15 million, do you really think it's an efficient use of capital?
Yes.
SoFi's name gets spread out to Justin Bieber's going to be retweeting this. He's an investor. Serena Williams, Justin Timberlake.
Yeah, but my problem with that is we get access to a lot of those people via SoFi Stadium already.
I know, but we want to double up. Sometimes it takes someone 15 times to see a brand name before they actually buy what they're seeing.
That's a very generic argument. And I'm thinking of diversifying and getting new audiences. I don't know if this is necessarily a new audience.
This is a much new audience.
Where did we get the golf audience?
If celebrity is the core argument you're going for, that's at SoFi Stadium.
They need 20% of America to know their name. That's what they've said. Unaided brand awareness is currently at 2%. If it gets to 20%, they believe they'll be a top 10 financial.
I agree, but do you think golf is what helps us get to 20%?
Well, because it's the high-end affluent customer. And so I think that's the niche that we've went after first before we go down market.
Yeah.
At the end of the day, they're just doubling down on what's proven to be a winning strategy, right? They're not idiots. They wouldn't bet on this if they weren't already seeing the ROI from SoFi Stadium. And so they're running the same play that they've known has worked with football. They're just now running it with golf. And when it works with golf, they're going to be running it with tennis. And when it works with tennis, they're going to be running it with so on and so forth. And it doesn't mean that like golf is like the next big, gold mine of unaided brand awareness. It's just another thing. They can measure an ROI to say, hey, this is our spend, this is our projected return, and this is the time value of that investment. Let's go for it.
So when they have an advertising budget, they're thinking about what is the best way to allocate that budget to generate brand awareness. Coca-Cola, Budweiser, they're synonymous with Super Bowl commercials. This year, the cost of a 30-second ad at the Super Bowl was $7 million. That commercial is going to be seen by a lot of people, but it's going to cost them more money to run that ad on other syndications. What we're going to get here is SoFi's name everywhere during all these matches being on YouTube, these clips of the matches being on
ESPN.
Instagram and YouTube. There's going to be a lot of highlight reels on ESPN. This is going to be the gift that keeps on giving. SoFi's name and logo are going to be everywhere. And if we want to keep taking away from the big banks at this rate, we need their name in the most cost-efficient way to be out there.
And so whenever people actually went to SoFi Stadium, do you know how they enticed people to go from being just regular SoFi Stadium event goers to being SoFi Stadium members? Or sorry, SoFi members? There were SoFi member lounges within the stadium that you could only attend if you were bank account holder, right? So actually being a member. And then they also offered 25% off concession stand merchandise and all those things if you were a SoFi Bank member. 25% off. One of the things that Anthony Noto recently said was they were sponsoring events like this. Like that's what they were doing. They were just having the commercials or sponsoring a NASCAR or something like this. Like that's what they were doing before. And then they did SoFi Stadium and they were just like the compounding effects of that is just incredible.
The PGA of America is the machine that's going to be behind this. Just like Rogan wants Dana White to put the UFC machine behind Muay Thai, this machine of the PGA of America is going to get behind this because they are an investor in this. The machine of Tiger Woods is going to get behind this. The machine of all the investors that are celebrities, the machine of Stephen Cohen. This is going to be advertised everywhere on an ongoing basis for free that SoFi is not going to pay for. These huge people own teams.
Let me then ask the group this, because I mean, this is an important question to consider. Why now? We know that this SoFi Center is still being
that's a great one.
and we won't see any gains or ROI materialize for another couple of years until the actual facility is built and the league is started. Yet this next 2 quarters is absolutely crucial for them to hit profitability.
Yeah.
And while 15 million might not be a big amount for SoFi in 2 years, it's a make or break amount for their bottom line in these next 2 quarters. So why now?
At least I have 2 answers for that. First answer is because the amount of money that they're going to spend on this is not going to break them from becoming profitable. They're obviously forecasting with this cost in there for them to be profitable. The second reason is because Tiger and Rory have been working on this for about 3 years now. This is when they are going forward with it.
Yeah.
They probably looked at multiple naming
the
people, and SoFi is the one that they went with, and SoFi is the one that made the most sense for them. It's also a timing thing. Tiger's a billionaire. You're not telling them, no, you got to wait a year. They're going to do what they want to do. They got the machine of the PGA behind them too. If this is the reason that they come in with -1 EPS in Q4, I'm going to be super fucking mad.
Okay, so that's I guess what I'm trying to get to is like either they're like, hey, we got it in the bag, don't worry, trust us, but they can't really like forecast to that certain degree for another quarter, especially in this like macro environment. We could get another hike. We could get so many things could happen that could affect their forecast.
Unless they come out on this earnings call and says, we are making this strategic investment, which could impact profitability in Q4. But if we don't hit profitability in Q4, we're going to come in at -1, and then we're going to be GAAP profitable going forward every quarter. I'll accept that answer. But if they don't say anything and then they miss in Q4, I'm going to be really fucking pissed off because of how much Noto has said that they're going to be profitable. And I'll understand if this opportunity supersedes that, but if they're going to miss, or if there's a chance, they got to say it on this call.
Well, you're right. I don't think that they can miss it if they continue to keep the narrative up that we're going to be profitable in Q4. But the naming rights on stadiums is not a very liquid market. So if they had to take the deal now because they come up, every now and then, and maybe one does not come up that looks this juicy with the backings of the investors that they have behind it. Okay.
Yeah, but Tannor, like we might give them the benefit of the doubt because we can see the forest for the trees. The market is going to crucify.
But getting to be a top 10 financial institution is not worrying about the investors' expectations over the next 3 to 6 months. That is not included. So if you want to really focus on long-term expectations, you need to take the big bets whenever you actually get them.
Okay, I agree with you guys, by the way. I'm just playing devil's advocate. And the devil's advocate is that the management team, the executives don't really have like 10 years to like, go slow and steady and win the race because of their PSUs in 2025. If they don't go profitable in Q4 and the stock falls back to $5, let's say, or $4, that's the wrong direction for the stock to fall. And it makes it so much harder for them to hit their PSU targets.
I don't think they're going to miss GAAP profitability in Q4.
Like,
No, I think Tevis, I think you're 100% right, bro. I think if we miss GAAP profitability in Q4 because of golf, that's not going to be a fun investor report. Now, Tanner's right long term, but also Tevis is right. Like, this is our opportunity to take share from the banks and to be a respected stock.
You call it golf, but what if you call it like 500 million impressions? Like,
dude, do we even know that's going to happen? Like, come on, man.
Just out of their investors, that's what they have across.
Yeah. So let's talk about that real quick. So I have the list in front of me. So outside of Tiger and Rory, which if somebody wants to look at their Instagram and tell me how many freaking followers I have, that would be amazing. Or Twitter.
Steve, just because you Instagram something to your followers doesn't mean they see it.
Yeah, but like there's two things, guys. Like unaided brand awareness is really a long-term play that you won't it's very hard to measure the actual tangible results. Look, let me present a counter argument. In February of 2022, they did the SoFi Money Moves campaign, which got billions of impressions. It got, I think, 6 billion or 7 billion impressions. Did you guys see a massive spike in terms of the actual numbers? No, you saw a gradual progression, but what you actually saw was that unaided brand awareness increasing. And so the unaided brand awareness is really all the stuff that happens in the background as SoFi accelerates their member addition. It's not an immediate ROI.
They're not investing in this because they think it's going to lose money. And when you look at the Mets, you look at the Penguins, Liverpool FC, the Boston Red Sox, Atlanta Falcons, there is no way that this is not going to be in their stadiums or arenas at some point next year. And the year after that, and the year after that. The amount of impressions that we're going to get virtually, the amount that we're going to see in these stadiums from this physically, if this becomes a repeatable business, I would like to think with PGA Superstores behind this and Stephen Cohen, that this is going to be a scalable business that's going to grow, that SoFi may or may not have an investment in, and their logo may or may not be on satellite locations. This could be bigger than SoFi Stadium.
Yeah, because it's not necessarily the building that we're sponsoring. We're sponsoring PGL. Good
this
point.
Can scale outside of it if this becomes centers the way Topgolf does, and they open this up to the public on a scaled down version.
Clearly,
what else happened this week?
The Galileo Mastercard thing, or the buy now, pay later to SMBs. We want to talk about that?
Yep. Go ahead, and I'll bring it up as you're talking.
So basically, Galileo partnered with Mastercard through Mastercard installments to provide buy now, pay later services to SMBs so that the Galileo clients, which is a B2B connection, can provide buy now, pay later to their like B2B2C client, essentially. We had the B2C side of buy now, pay later. This is just an expansion to provide it to their end clients. And look, this is coming at an interesting time, right? Because you got to keep in mind that last week's news around Galileo was the FedNow partnership, or Galileo basically providing an on-ramp onto FedNow. And then before that was Galileo's APIs around installment lending, installment loans to their clients. And all this does is it builds a wider moat in terms of that tech ecosystem to leverage Galileo from an end-to-end tech perspective.
Essentially, this is not us lending out to small to mid-sized businesses. This is us offering large financial institutions who do already do this the ability to have more of a streamlined, faster approach to this through Mastercard installments, which is very much a great product and pays the actual merchants or financial institutions instantly with no risk, while slowly receiving the funds from the merchant. Then Mastercard will collect that themselves. Very, very interesting. And it's just another offer because, you know, those large banks, they obviously need many more services than the small fintechs like Chime or Current or something like this. And so offering these more complex products will bring on hopefully more of the Wells Fargos, the cities, which is our new target demographic, or at least that's what management has been expressing.
Yeah. I also posted about, we talked about this last week. I don't know if we want to get into macro, Steve, again, but the debt spiral around 275 billion being added in a single day, that blew my mind quite a bit. US debt crossed 33 trillion.
Bring
And
up the U.S. debt clock.
US debt clock. We're on track to be adding, well, I say US is on track to be adding 1 trillion every month in debt. No, like, I don't think people understand how wild that is. And then meanwhile, Biden announced 9 billion additional for student debt cancellation. I mean, Supreme Court's probably going to shoot that down, but just read the room, man.
Right there, the interest on the debt doesn't stop. You have the 2-year, I think it hit like the 12 month hit like 5.47 today or something like that. We're issuing debt at higher levels. And
what was really interesting though is with the 10-year at basically 9 today, if you round up, the jobs report was incredibly hot, right? 330,000 jobs. But the market reversed, and it kind of was the good news became good news. Like a good economy is a good economy versus the inverse of inflation.
The jobs report was kind of mixed though, right? Like the top line number is really good, but wasn't the split really weird in terms of like the part-time versus full-time? It was like 80% part-time.
Look, the real figures next week, next Thursday when CPI comes out. If we get core tick up, that's going to probably,
we're not going to tick up. We're going to go at least 3.5 from 3.7. I doubt.
I don't know. Oil's been up, man.
Well, yeah, for September, it's come down, but September, you're right. It was.
So if CPI and of course CPI tick up, it may force the Fed's hand because of how hot the economy is and unemployment is still around 3.8%. It could force their hand. I mean, if you look at the CME Group FedWatch tool, I think it's 11.8% chance that in November they're going to bump it 25 bips. But if I remember correctly, it's like 37% for December that we get a hike of 25 bips. So a lot of people aren't necessarily concerned about that, but we really could be in an environment higher for longer, which could be bad for a majority of stocks out there. But based on what Dodo said, it could be good for SoFi, because if we have higher rates for longer and then they start coming down at a slower pace, SoFi is going to be able to have the most attractive rate for a longer period. I mean, they're going to have one of the most attractive rates regardless, no matter where rates go. But this could actually work out in SoFi's benefit from an attractiveness from the customer standpoint.
I think this is all predicated on the idea that we haven't really seen large losses in our loan portfolio. And if rates do stay higher for longer, and people are debt consolidating for a reason. Unaffordability. And if it continues on for too long, then the SoFi loans that we're offering them can become unaffordable. And at that point, things get quite scary because we just debt consolidated all of these people, which to the good side, they have good FICO scores and good, high income paying jobs. But if tech is laying off and all of these things, and people are needing to get a new job that might be lower paying, then who knows? They could be in a completely different situation than now. And
you cannot have unemployment go up to 4.5 to 5%. 5% is that critical number where recession is imminent.
Well, no, it's not imminent. It's past the point of no return. Those are lagging indicators. If unemployment goes up to 5%, you're in a recession, right?
It's recession will technically hit within 12 months of hitting that figure.
I know, but what I'm saying,
no one knows
yes, you're in it, but it'll confirm it.
Exactly. What I'm saying by you're in it is like nothing you can do will stop it. It's already the thing has already started.
Unemployment is the key indicator. It's not where rates are. It's not the freaking inversion of the yield curve. It's unemployment.
Well, I don't know, man, because like oil, there's macro levers for oil with what's going on in Europe, right? And so as oil fluctuates and is more volatile, that's obviously going to affect CPI numbers, which is going to affect the Fed. I think the black swan is also the fact that we're heading into an election year. And that's why we're also seeing this crazy spending in terms of, this was like end of fiscal with regards to Social Security, the $275 billion that was added. But even like Biden adding the $9 billion in debt forgiveness, those are all attempts to buy votes as we go into an election, right? And those are all factors that play into this number. I do think that we're going to get 25 bips in November, but I also think that some stress fracture is going to happen and we're going to be higher for shorter, not longer. That we actually see a reduction in the spring and or summer. because of these stress fractures that the Fed is going to introduce by raising another 25 basis points in November.
Yeah, you have the two sides. So you have corporate / real estate debt coming due, and then you have personal because you have people that have floating rate on credit card, where some people are over 20%, some people are in the high teens. You have some mortgages that are not fixed. You have mortgages that are at a high rate. We've been lucky that it has not cracked yet. If 25 basis points is what makes it crack, we're going to have to wait and see. I don't think they can really go that much. This is a different time than in the 80s and in the 90s. You know, if you look at a 40-year period, 5% should be normalized, but it's not normalized when you had rates at next to nothing and you had your business model based off of very low debt. And if you have to refinance now at higher rates, it causes real stress on the business cycle. So the Fed has to, they're not dumb. They are putting it, making it seem like they don't care and they only care about maximum employment and inflation, but they have to be considering all these other things. And whether they want to say it or they don't, and they are trying to thread a very fine needle right now. And I think they're even trying to figure out what the breaking point is, because they can't control production of oil in the US or internationally. There's a lot of factors that go into this.
Looking at what the consumer loans right now for credit cards and other revolving products at commercial banks, credit card debt mainly, you know, companies like Lending Club will point to say, hey, we have an amazing total addressable market. We have all this money to actually go in and refinance it and bring down those rates. And that's great. And the total addressable market is only going up. You also have to address, why does it continue to go up? Are people having a hard time even affording to live, so they have to put it on credit? How long can that string go on for? And then, you know, you tie that chart with federal funds rates and you're like, okay, well, if there's another 25 bips and that's going to go out till, you know, maybe another year, something has to break. Something has to break, and let's hope it's not on the side of SoFi. Yeah, Doug, what he said, credit card balances up, savings down, not good.
All right, I gotta go.
Love you guys.
Don't
Thank you
get
all
in
so much for
trouble.
joining us. Bye
See
for now.
everybody. Bye.
Uh-huh.